What's up, traders? John Hal here. Hope you guys are doing well. In this video, I'm going to talk to you guys about, stock market, and also Forex trading for beginners, kids, and also for people that really want to get ahead in the market. So that's what this video is all about. Guys, this video here is education only to help you get ahead in the markets. I'm not teaching you a strategy or where to get in, where to get out, all that sort of stuff. I'm just giving you some guidance, some tools, some tips to help you move forward in the market so you can start to move forward in the market in the big way. These are the lessons, guys, that I hope you can see and hope you can hear from me that I've learned over 10 years of being involved in the markets and being coached by some of the most successful private traders on the planet. I'll put it this way, one of my coaches right now is a private trader, makes a few $100,000 per month. Over $200,000 per month he makes. So that's his qualification. Okay, so and through all that study and through everything I've done with myself as well too, I'm going to teach you this here. If you'd like to get more education, more free education, maybe in a trial to try out my coaching, my strategies and some coaching, first link in the description, guys, click on that. So let's actually get straight into the education today. And I want to teach you guys about trading for beginners and what to focus on and so on and so forth. Now, the reason I'm doing this video is because a lot of people that get involved in the markets, or maybe you've been involved in the markets for even a short period of time, 12 months, or maybe 6 months, 12 months, maybe more. And we have the tendency, right? We have the tendency to make our chart look like this, right? Because we think the indicators are going to give us that edge. The indicators are going to give us the edge on the markets. Now that can happen sometimes and so on and so forth. And it's really, really difficult to really see what's really going on in the markets there. Now, what we end up doing is this. When we are trading the markets, if you think about it, right, and I went through this whole process too, all right, when we go through markets, we think about having these multiple indicators, and we've got the Bollinger Bands and moving averages and MACDs and stochastics and RSIs and volume and all these different things here. Make sense? All these different things here on the chart. You can see this is the actual chart itself. So what we tend to do, and what we tend to do when we actually trade in the markets, when we're trying to get ahead in the markets. When I first started trading, I thought that I had to be really clever, or I actually had to have a lot of like different things on the chart. So I would start to analyze and start to try to pick all these bottom bits through here and up days and down days and all that sort of stuff, right? It was so difficult. But here's the thing that I realized, and it's counterintuitive to the actual market itself, and it's the way that we actually believe. Right? Because I think at the end of the day, we believe that the market is difficult. It's a very difficult process. It's very difficult to trade and all that sort of stuff. Makes sense? So what we tend to do is when we're actually trying to trade the markets, we naturally want to put all these indicators on there, right? And see what happens with the markets and state of these indicators and all that sort of stuff. You know what I mean? This was the low point through here. This was the low point through here. What happened? Oh, look, we got a bit of divergence through here. Look at the stochastic. And what ends up happening is when we actually have all these indicators on the chart, we end up becoming confused. And we end up flipping things on its head. Meaning we make 90% of our trading decisions based on what the indicators are telling us, and 10% of our trading decision based on what the market is telling us. Which is the wrong way to go, right? Because indicators are just a mathematical calculation of what price and volume is doing. That's all it really is. So if that's the case, isn't it much better to actually analyze what the market is doing, what price is doing? Makes sense, guys? So what we need to be doing is forgetting the indicators and going back to spending more time studying and analyzing the chart itself. So we want, as I said before, we want a tendency of when you're starting out or you try to get in the markets, we want to focus on all these indicators through here. That's what we do when we actually first starting out. But it's the wrong thing to do. And the reason why is because there's so many things that can mislead us, right? All these indicators is only going to make life difficult for us to get ahead. Trust me, guys, I've been there before by my chart looking like this. And there's so much stuff and there's so much crap on the chart. Make sense, guys? So what we want to do is we want to slowly delete everything off the screen. In fact, we want to slowly bring it back to where we've got a chart that looks something like this. Where we've got volume down the bottom here, and we've just got the market itself, or this chart itself. And if you want it, and when you're first starting out, I recommend going back to a chart that looks like this. Now, why do I say this? Why do I say bring it back a chart to look like this? And the reason why I say that is this, is because what we want to do is we want to spend most of our trading decisions based on what the market is telling us, not the indicators, because there's only really two truths in the market. It's price and volume. Everything else is just a laggy mathematical calculation on what the market is doing. And the better we can get at reading this market, the chart, the better trader will be. Now, the reason why I say bring up a blank chart like this, where it's just a white background with black open, highlight, close, the reason why we're doing that is because when we are first starting trading, especially, we're trying to take in, remember guys, with our minds, right, we're trying to take in every single thing possible. We're looking at the charts. And if we've got grid lines, if we've got colored bars, if we've got all these things on the charts, moving averages, trend lines, all that sort of stuff on the charts, what ends up happening is it's confusing us, and it's confusing us from what's really happening. The most powerful thing that I've learned in the markets is to pull everything from the chart, everything, even the volume when you first start to learn, and going back to a blank chart like this. And what you want to do is you just want to analyze what the highs and what the lows are doing, because that's the thing that's telling us a story. The highs and lows, or the peaks and troughs. So you want to go here, and the most important thing you want to do is when you're reading the markets is looking at these highs and lows, seeing how the market flowed through here, seeing what happened, you know what I mean, and looking at these highs, these lows, and just analyzing price. And what you're trying to do is you're trying to gauge, you're trying to analyze. No, you're not trying to, but you are. You're analyzing, and you're seeing what's really going on in this market right now. What's really going on this stock right now? Because again, guys, the most important thing we can do when reading the market is going back to a blank chart and reading what the chart is telling us. Because and that should be 90% of your trading decisions. Now I'm going to tell you something that's a fact. Throughout most of my entire trading career, I struggled to remove the indicators from the charts, because I wanted to hold on to them. I felt like I had to have all these things on there, right? Like they were going to give me the secret sauce and all that sort of crap. What ended up happening was, guys, I end up confusing myself and having a hard time in the markets, because I was so confused. The indicators are saying this, but the market's saying this, and so on and so forth. What we need to do is we need to be focusing on just what the market is telling us and reading the charts, because that's where most of your trade decisions come. And what you want to do is you don't want to have things complicated. You want to have things really, really simple. And what I mean by that is bring up a chart that looks like this and analyze it. Analyze it. And whether it's a daily chart, or we're now looking at a weekly chart here as well too, but this is back to a daily chart. And what you want to do is you want to start with a 3-month view. So right now we're looking at a 3-month view of this particular stock. And what you want to do is, when you're first starting out as well too, guys, one thing I found really helpful when I was first starting out is was just to draw the lines on the highs and lows, right? So this was the low point, that's the high point, and that low to high was there, and that low to high was there, that low to high was there, and high. And what you're doing is you're just drawing the highs and lows. Why? Because this is telling us a story. That's the high point, that's the low point. High point, low point, high point, low point, and now we've got a high point. So if you actually look at this market here, right, you actually look at this market, you can actually start to see, and that was probably the high point. This is the last 3-month view. And what you're doing here is you're just looking at what the market is telling us. So if you go through this here, what do we have for here? We had a lower high, but then we had a higher low. So who's in control? If you saw this on the chart here, if something's making a lower high and a higher low, who's in control? No one, right? Because we're either got buyers in control, where the market's stair-stepping higher highs, higher lows. Sellers in control, lower highs, lower lows, or no one in control, which is basically a market doing what it's doing here, right? So we only want to be trading with something where we're clearly someone in control, where it's definitely making higher lows, higher lows, higher highs, lower lows, lower highs. But when it starts to go into the sideways movement, when we start to get involved with this, we don't want to be getting involved with this, because when the market's going sideways, the chart is telling us no one is clearly in control right now. So therefore, the market could go either way. You know what I mean? Like, and to put the probabilities on your side, you want to be trading with someone that's truly with someone that's really in control. So then we made a higher low. Then what ended up happening? We made a higher high, right? So then, oh, okay, cool. Now we made a higher high. We've got a higher low. Oh, buyers might be starting to control. Look what happened here. It made a lower low, right? It's like, oh, hang on a minute. made a low. See how this market making it's higher, lower, low. There's no one really in control, is there? And so now what happened? Yeah, well, now we made a lower high. Oh, lower low, lower high. Oh, look, buyers in control. Oh, look, it made another lower low. And as the market's forming these bars, and you're starting to, oh, shouldn't have done that. As this market's forming these bars, you can start to see what's actually going on through there. But then guess what ended up happening then? Then we made a higher high. So you can see here, we started getting sellers in control, and then bam, right, it started making this higher high. As soon as it started making this higher high, guess who was a sign that someone's coming control? We're now getting what? We're getting buyers in control, right? Or buyers are starting to show this sign. Then we made a higher high. Then we made a higher low. Then we made a higher high, and now we've made a higher low. So if we've gone through this chart through here, we can see that this whole thing through here was a bunch of goobie-glog. You know what I mean? Like there was no one really in control. Bring it back to the actual charts itself. But now we focus on this last say period of time through here outside this box. Who's clearly in control of this market right now, or this stock? And it doesn't matter what this is, whether it's a Forex chart, a futures chart, a stock chart, 1 minute chart, daily chart, they all operate the same way. Who's in control right now? Buyers. So if we're looking for a trading decision that's going to give us probability of having a successful trade, would you rather be going long this stock here, or going short? Right? If you're going short, what are you doing? You're going against the trend. Wrong, right? You don't want to be doing that. You want to be going with the trend. Now, I'm not saying go long just because the market's making higher highs, higher lows. No, you still want to have a good entry day and so on and so forth. But as you can see, trading can be as simple as just bringing your charts back to this here and removing all the fluff and clutter and crap that's only going to confuse you, confuse you, stop you from getting in a good trades and so on and so forth. Makes sense? And this is the best thing you can do by looking at and reading the market and reading the charts, is by doing this. And so as long as you are trading with who's in control, i.e. the market's making higher highs, higher lows, if you're trading with who's in control and you're trading with the trend, the trend is definitely up here, your success rate is going to go through the roof, because now you're just waiting for the market to show you someone who's definitely in control. Someone who's definitely in control. As we saw through here, right? This whole period through here, no one was really in control, right? So if you're trying to go long, short through here, no one was really in control, was there? Then suddenly what ended up happening? Bam, market made a higher low. Okay, cool. Then it made another higher high and a higher low. Who's definitely in control right now? Buyers. And look at the market breaking out. Make sense, guys? So I hope this really helps you out. No matter what stock or no matter what market you're looking at, if you're struggling to get ahead in the markets and you're trading, whether you've been trading now for a year or more, or you're just starting out, this is what you want to be focusing on. This is the most important thing. This is 90% of your trading decisions. Then your other 10%, if you want a few extra things, then your other 10% can come from volume. Oh, look, it's a nice breakout bar with good volume. Okay, well, if there's a lot of volume behind a nice breakout bar, okay, well, that must mean there's a lot of people there. And then if you want to add even more, then you want to go to a place where you want to start adding a few moving averages on there. Maybe not a lot, maybe just one. You know, again, you don't need to have all these different moving averages on here as well too. Maybe if you just want to have just one, you know, or two. So I like to use 3 because they give me a good gauge. But now the reason why I use moving averages, guys, is because it gives me a gauge on momentum. So let me ask you a question. Looking at this stock right here, right now, as I speak, I don't know what's going to happen tomorrow with this stock, but we've just gone through a lot of analysis, right? We've got a good breakout bar. We've got the higher highs, high lows. This stock here is the exact same stock that we just did analysis on, right? It just looks different. This here is the exact same stock as this one here. I've just put up the candlesticks. But now, as you can see, right, even bring on the candlesticks, right, it makes things look a bit different, doesn't it? That's the reason why you go back to this chart here and read what the market's telling you. Now, as you can see here, right, and if you look at the moving averages, you can actually see that the moving averages here, right, the market's pointing up. This 9 is pointing up. The 20 is pointing up and the 52 is pointing up. Now, why do I use 52, 29? I don't know, because I like to use them. You can use whatever you want to use, okay? The whole point of me using those is I want to make sure that even though I'm trading with the trend, everything's up, I want to make sure that momentum is on my side. And if I can have my short-term 9-day pointing up, my 20 pointing up, and my 52 pointing up, not only is the trend going up, but you can see the momentum, right? Momentum is definitely up as well too. So therefore, my chances of having a successful trade has increased even more. Since I've done that, guys, and I started simplifying things. Now, there's a few other things I look for. Make it like, this is a daily chart here. So there's a few other things I like to look for, like the weekly chart and so on and so forth. But since you do that, right, and there's really only a few things that I like to look at and that I like to do. And let me actually, there's a few things here, guys, right? So what is it? One, you want to focus on who's in control, right? Who's in control? Are sellers in control? Are buyers in control? Or is no one in control? That's the very first thing you need to be focusing on, not moving average or anything like that. Second thing is when you got someone that, is like, are you trading? Are you trading with who's, if someone's definitely in control, are you trading with that? Number three, have we got volume? So if you're getting in like a nice breakout day, do we have volume behind it? An increase in volume is a good thing because it shows you there's a lot more people in there, possibly even institutions, which is most of the time it is, getting involved as well too, right? We're just piggybacking that institution volume. And number four is, do we have momentum? And how you gauge momentum is moving averages. If you can start to, well, that's four. And number five is that, are we trading with the weekly trend? I'm trading a daily chart. So if the weekly trend is definitely up, then that's a really good sign as well too. Stick to these 5 points through here, guys, only, and remove all the other crap. And I promise you, your success rate, your confidence, and everything will start to move higher more than ever you've ever seen before. So there we go, guys. A bit of a trading update for you guys for trading for beginners. If you're trading Forex, futures, or whatever, stock market and futures trading, you know, beginners and all beginners tips to help you move forward in a big way. Hope you guys enjoyed this video. Give it a like, give it a share, and I'll see you guys in the next video.